In other news, the South African rand has weakened alongside other emerging market currencies as the dollar rebounded this week. The rand weakened early trade as investors await the monthly Purchasing Managers Index, that's PMI survey by S&P Global to find clues on South Africa's economic health. Here are the details of this and other stories making headlines across the continent.
South Africa's rand currency and stocks weakened early last week as investors opted for caution in the final trading session of the year. Local data showed that the country's trade balance returned to a surplus in November after slipping into deficit in October. The dollar index, which measures the currency against 6 rivals, was up last at 0.07% at $105.2. Other data showed that South Africa recorded a budget deficit of 23.52 billion rand in November, compared to a shortfall of 21.78 billion rand in the same month a year earlier. Investors are now warning against a financial crisis as the rand is highly susceptible to global drivers such as U.S. monetary policy. Elsewhere, Angola President João Lourenço has formed a working group to draft a national plan to ban plastics in order to address environmental degradation and regulate the production and use of non-biodegradable products. In a presidential order, Lourenço states that there are worrying levels of pollution resulting from the use of plastics in general. Angola, with a 1,600-kilometer coastline, has no policy in place to restrict the use of plastic. The president called on representatives from business associations, academia and environmentalists to support the cause and help reduce the menace. And finally, Algerian President Abdelmadjid Tebboune has offered to sell to Europe its spare electricity capacity and is planning a 270-kilometer undersea pipe towards Italy. The nation is also pushing to double its gas exports to reach 100 billion cubic meters per year versus 56 billion cubic meters per year. This, however, may not be possible as the EU demand of natural gas is already at a heightened state, hence making Algeria less likely to meet demands due to their reliance on hydrocarbons.